Good afternoon, ladies and gentlemen. Hope you're well. And yeah, all's good in WA, and hope all's well wherever you are listening to this from right now. We've got an interesting day going on. It's quite a positive, bullish vibe going throughout the Asian markets at this stage. We'll have a look at what that means in terms of market sentiment. But obviously, we need to start off by just reminding you the key messages from this type of session. Obviously, it is for educational purposes only, and nothing that you see or hear should be taken as direct advice to take trading action. You need to make that decision yourself based on your own trading plan and investment objectives. Obviously, the opinions that you hear are mine rather than representative of Go Markets, and should be seen as such. So please, again, just bear that in mind. And so let's get on with it. Just let me know you can, I'm thinking you can, hey Dean, good to see you, buddy. Hi Rachel. Just let me know you can hear me and see me okay, and we'll kick off things off. Hi Ross, hope you're good. Thanks Wayne, that's awesome. Right, okay, let's start with what's come across the news. Of course, last night US equities, thanks Ewan, closed lower but paired early losses in what was a choppy session. We'll have a look at a chart in a moment of that. US futures were slightly higher on open or soon after open, but have shot up fairly significantly during the course of the morning. And Asian markets have followed suit. Again, a little bit of a damp start or a little bit of a soft start, but even the China index was the only one that was in the red about an hour ago, but even that's turned positive now. US dollar index is under a bit of pressure, looking at 90 as the key level, and precious metals are also on a tear. We'll have a look at that, and copper's also moving higher over the last couple of days after a little bit of a pullback. In terms of the data, it is quite a busy day today. Lots of things for the market to digest. We had Japanese GDP with a slight miss, which was released earlier this morning, but it ramps up this afternoon. We've got UK and Eurozone employment, Euro GDP, and US housing data all to be released, and so that all may influence sentiment to some degree, though of course we're still very interest rate sensitive subsequent to the events of last week. So let's put some meat around those bones. Let's just have a look at what's going on. If we just quickly have a look at the US 500 daily, you can see the action today. There's that bounce after last week's inflation concern driven downwards move, which took us down into pullback territory, around about 8% on the Nasdaq, around about 5% on the S&P 500. We talked about this on Thursday. We had a nice bounce to close the week. Bit of a neutral day last night, being Monday, and of course we're up higher today as I've suggested. But if we just put it on a short-term chart, you can sort of see what's happening going on in Asia today. A little pullback over the last 20 minutes. That's interesting, but yeah, that's where it's at. If we look at the futures, just to sort of add to this, there we go. You can see they're all very much in the positive. There's the Nikkei futures, which are up significantly, and of course the European futures are up as well. We've seen the US dollar just drop, and you can see it's closing on that 90 level, strengthening the commodity-based currencies, strength in silver, and continued strength in gold, although not quite so spectacular as silver. But silver has underperformed gold a little bit over the last sort of few days, and you can see oil starting to get some buying coming back into it as well. So a very bullish day compared to that which we had at this time last week. Notice also copper is now on a move again. You can see on that chart that I've just sort of actually I'll put it on the whole chart. And we'll have a look at this in a bit more detail. But you can see we had that pullback last week, but we're bouncing and now starting to move higher again. A quick look at the economic data. Just There's that. Just pop back and there's that Japanese GDP coming in slightly softer than expected. We've got the RBA minutes out in Australia, and there's the UK employment number. We've got trade balance figures and GDP number. GDP is a big number coming out of Europe, so that, along with the employment change, is likely to affect euro-based crosses. And then we've got this housing data coming out. Housing starts are important, but not as perhaps as important as pending or existing home sales. So that's where we are. Let's just have a look at some more charts. There's the US dollar index just holding on by the fingernails to this support at around about 90. Let's just move this up a little bit. There we go. So that's the support level that's really important. We tested this last week and in mid-Feb. So just had this downwards trajectory on the USD over the last sort of month and a half. Now, consequently, you would expect some of the currencies to be in a slightly better place than they are. But if we sort of look at the Euro USD, you can see, although we're up, we failed after several attempts to break this 121.66 level. Having another pop at that today, you can sort of see that if we look on a short-term chart, how it's just holding on just below that key resistance level. If we look at the impact on precious metals, as I said, they're on a bit of a tear. This is silver today, so certainly off their highs a little bit, but we're now eyeing 29, which is quite spectacular in terms of where we were perhaps at the beginning of April. So we've had a strong move up around about 17% since then, and gold is testing next key level at 1870. So again, worthwhile keeping an eye on those. Some of that data may move that, of course. And with the with the Euro USD, then obviously that GDP and employment numbers is gonna influence the price of this, and it may be one of the reasons why it's not moving up as we see in some other currencies like the Aussie dollar. There's the Aussie dollar moving up in Asian trading today, but let's remember context is important. So we are under a key resistance level on the Aussie dollar. If we look at the GB pound, this has possibly been one of the outperformers. You can see we actually broke, or we were on resistance, but that's the one that's breaking today over that key resistance at 141.45. Looking at a 30-minute chart, you can see the tear up since Asian market open, and a little pullback, but certainly this is our chart of the day, is the GB pound USD. Looking outside the US dollar crosses, Euro yen is sort of interesting. We've got what looks like an ascending triangle formation with the top of that at 132.82. Again, if we put it down on the shorter time frame, you can see how we've really sort of tested that throughout Asian trading today, and we're looking to break this pivot high we hit in yesterday's trading at 132.93. So possibly 133 is the level to look at on the Euro GB pound. Let's just look at Euro Japanese yen. Let's just have a look at GB pound yen to see where that's trading, and you can see again really strong in Asian trading since open. If we put it on a daily chart, we actually broke this key level last week. We're just drifting higher from where we are now. And just again, to put this into context, you can see this is highs not hit since beginning of 2018. Arguably, you could actually suggest that there is, if we look at that closing high right at the beginning of 2018, we are sitting on that now at 154.75. If we do break this level, again, looking at the longer term chart, there's a lot of pips up to the next resistance, around about 500 pips up to the next resistance on the monthly chart. Don't suggest for one moment it'll go anywhere near that in one hit, of course, but nevertheless, possibly even a long-term trade here could be on the cards. And this is perhaps reflective of the really sterling job that the UK has done in getting vaccines in people's arms. Have got over 50% of the population have now received at least one injection, and really pushing it very hard, which is obviously going to bear fruit going forward, providing the Indian variant on the virus is seen to be responsive to the vaccine too. Again, if there's any you want me to have a look at outside of what we've looked at, then feel free to ask. The other one that caught my eye a little bit was, well, just pop it on the daily chart, was the Kiwi yen, which has chopped around in this range now for really since the best part of a month. So just watch that 79.28 level. We are starting to move back towards it again, although we have tested it in the last 2 days without success. Just see if there's some momentum comes into this towards the back end of the day, and that may well be one to have a look at. Where do you see gold going in the short term? Great question, Ross. Well, much may depend on if we just go back to, there's two things going on, or two things which I think are going on. Obviously, this is my opinion only. Okay, so first of all, we've got US dollar testing support. If it does break that support, then we could see some additional move up in gold. But you can see that both at key levels now. The other thing that may be happening, which is sort of interesting, is if we look at Bitcoin. Bitcoin is now trading at lows not seen since beginning of February. So that's interesting. In terms of Bitcoins, now some of that is due to, you may have heard the headlines that first of all, that the energy usage related to mining Bitcoin, etc., is quite high, and there's quite a few investors have pulled out using that as an excuse, including Elon Musk and Tesla's holding of Bitcoin, and this resulted in this drop here. Okay, down below that 50,000 level. If we look at Ethereum as an example, so it's not just a Bitcoin issue. We can actually see that this, although it's dropped 22%, isn't as low as, or isn't as a technically doesn't look as weak as Bitcoin, but nevertheless, that's still a very significant drop, taking us almost back down to 3,000 on Ethereum. And so there's a general sort of weakness or general sort of concern in cryptos, possibly due to possibly due to this sort of general sort of pullback. There may be some profit taken for those who are trading Bitcoin rather than investing in it, or trading cryptos rather than investing in it. And I'm not suggesting for one moment that that would be that this is a long-term. I mean, theoretically, if something drops 20%, it enters bear market territory. I'm not suggesting for one moment that this is the end of the long-term crypto's bullish move, but nevertheless, sorry about that, guys. Just let me know you're still receiving okay. There was a little bit of a computer accident went on as it went flying across the room. That was very dramatic. Apologies once again. Cool. Thanks, guys. No, I'm okay. I think the computer seems to be working okay. That's all good. So anyway, that's where I'm seeing that's where I'm seeing cryptos and its relationship to gold. So there may be some money going into gold that would otherwise go into cryptos at the minute. Just a theory, but possibly worth having a look at. Also, with Tor Copper significantly, and I just wanted to invest a little bit of time on copper. So this is copper, and as you can see, we had that pullback, and we've got to move higher. And I just thought I'd show you this because I've been trying a little bit of an interesting strategy on this. You can see we're in multiple copper positions. In fact, we're in even more than this. There we go. Okay, so we're sort of buying on dips, even short-term dips, and kept buying as it went down. Now, that's not something I would normally advocate, but there's two reasons I'm showing you this, okay? First of all, I want you to look at the pricing of this, okay? So this is 0.2, okay, of a contract, of a CFD contract. But you can see that even with, and that's really quite a small position, but you can see that there's only 2 cents difference, or 2.5 cents difference between entry price and exit, and yet there's $154 difference in that. If we look at this one, even more spectacular, there's 9 cents difference in this, and you can see the gain on this one. So if you are looking at copper, just be careful of the position sizing relating to it. It's a really interesting one in terms of how it sits. Of course, outside of that, we've ridden the Oz Minerals roller coaster over the last few days. You can see, but it has obviously turned positive today. We'll have a look at stocks in a moment. But I just wanted to show you that just in terms of the real deal. So if you are looking at trading copper, that's where to do. With other indices, you can see the DAX is back, rocking and rolling. Just watch this for those of you who are trading other indices, that 15,519 level, and that's really sort of the key level on this. We may get a challenge of that, but bear in mind obviously that this is a futures contract that this CFD relates to. So those US futures that you saw high are already priced into this. So it's, have we the momentum to take the DAX to new highs? And much may again depend on that data that comes out of Europe. I can hear you. Is it too late to short Bitcoin? Now, you can see it's at a support again. You can see it's at a support level. Is the first thing. That's what I would say. Now, I'm by no means a crypto expert. I did short Bitcoin yesterday in a short-term trade on this account. But generally speaking, it's really hard to call. But you can see how it's at a support level now. It failed. We've had a rejection of a further down move yesterday. We've had exactly the same in Asian trading today. So it looks well supported around this 45,000 level. So perhaps use the pivot lows if that's of interest to you. I wouldn't get interested in shorting anything where there's this sort of candle action unless it broke those pivot lows. Now the other thing to say is if it does break these, then there ain't much. There's about 6.5% down to what could be the next pause level. So you probably, if you are interested in this, technically you would have to be very nimble to take advantage of that. I hope that sort of makes sense in terms of the logic associated with what you're seeing technically on this. Right, okay, just looking to see if there's any other questions. I'll look at the 20 EMA on the weekly for sure. I'm guessing you're saying Bitcoin. That's interesting, and good call on that. Good call on that, Dean. I know you're a bit of a cryptos aficionado, but that's a really good call. If we look at the 20 EMA on the weekly, so this week is going to be key. We are below that right now, which again suggests, and we look at this, it looks a little bit like a sort of wonky head and shoulders pattern, but nevertheless the sentiment is clear. But you can see how important this level is. There's the 20 EMA. You could put a 21 on that, but it's not going to make a massive amount of difference, as you suggested, Dean, but we'll put it on anyway. There you can see it's right on that 21. In fact, it's broken below that 21 EMA at this stage. So where this ends up at the end of the week could be critical. What's important is that cryptos don't take another fundamental hit. So obviously, there was lots of buying came in when Elon Musk was saying that Tesla had bought a heap of Bitcoin. So there was obviously going to be a response to that, to the downside, and that's what we're seeing now. So as long as there's not any more negative fundamental news on this, then we could see a situation, particularly if it holds this level. As with any chart, if you see a holding of a level, we could see a bounce in this. But being patient and waiting for that to happen rather than guessing it'll happen is pretty important. No worries, Ross. We'll talk to you later, mate. Although some of it will be options related, undoubtedly, we've got options activity based or always in the third week of the month on the futures contracts or on options on anything, which will move commodities, which will move things like Bitcoin. But really, that should all be done and dusted by Friday. So we'll see what the overall market sentiment will be on Friday, and then you can possibly make a considered decision technically after that. Great input, guys. Thank you. Let's just quickly look at the ASX. Look at what's going on right now. As I said, all of the Asian indices are higher. Let me just check in on that for you quickly. So you've got Shanghai slightly lower, about 0.08, but the Nikkei's up 2%. Kospi's up over 1%, as is the Hang Seng. So not surprising to see the ASX also to the upside, but interestingly, as you see, off its highs of the session. So just over the last hour, we've had this sort of just pullback, which actually takes us to where we were when all positions were open. So we're not rampaging forward, despite what the futures are telling us. And if we look at advances versus decliners, they're pretty sort of in the balance there. So if we look at what's doing well and what's not, we see some buying coming into banks. If we look at CBA and ANZ all up, if we look at resources, they're also doing very well. BHP back up towards 50-50, which is an important level. We'll have a look at a chart in a minute. And as I said, Oz Minerals on a little bit of a tear, up nearly 7%, and that's on the back of that has been sold off quite significantly over the last few days, but bounced with a vengeance today. Possibly people buying on the dip, and also that resurgence in copper. Outside of that, then we've got stocks which are showing a mixed sort of picture. We'll have a look at Qantas in a moment. But you can see Xero's down, Zip's down, though only by a cent. And you can see Afterpay are down 1.5%. So Macquarie. And Macquarie are starting to move higher again after a little bit of a pullback. We're not getting any joy in retail. You can see there, down in retail, James Hardie are weaker on earnings report. Just watched, there's quite a few Australian companies reporting at the moment, so please do your due diligence in anything that you haven't looked at. Let's look at some charts of some of the stocks that we've talked about. Let's start with Oz Minerals. So here's where Oz Minerals are, and this is, so as I said, this has been a bit of a roller coaster ride in there. We saw this drop back to really what was, if we just put this on a line chart, this was really quite a key level. If you see there, that was previous resistance. It did have a little foray above that. So this was a key support at around about 24.70. And if we look at a daily chart, you can see it actually tested that fairly significantly. But look at that bounce today. So we're seeing quite a lot of stocks bounce with some vengeance. If we look at BHP, just let it catch up a little bit here. So again, you can see a BHP bounce. This 50-50 level is important. Let me just put the line on there so you can see it. So you can see we had 3 tests of this. So there's 50-50. If we can get back over that, then there's no reason why we wouldn't test 51-50 very quickly. CBA, I think we're our chart of the week last time we met. That's just continued to move higher. Very impressive move up on CBA. They had good earnings come across the wires, and really that's continued since then. So that, I think, we're our chart of the day for share CFDs on Thursday. So that all looks pretty impressive. Qantas are worth a look just because they've triggered my interest on this bounce. We're actually looking a lot stronger earlier in the day, but you can see they've just sort of dropped off again. Now, why is this an important bounce? Well, if you look, this 440 level was an important level. So if we break 460 or 455, which is where we're at now, then essentially that takes out, we had a bounce there, that takes out this low, that takes out those highs. There's a gap we eventually filled. So we could see ourselves back up to test that 200 MA, and of course that's below that key $5 level that we've referenced many times before. So that's why you saw a Qantas position there based on that bounce, which sort of fits our bounce strategy. We had a good move on that. Just having a quick look at questions coming across. Yeah. Do you also use ASX sectors performance for potential stock selection? You look at the sectors which are, I mean, that would be the first thing. I would always look at sectors, which sectors are outperforming and which aren't. The fact that resources and financials make up in excess of 50% of the ASX market mean that it is quite biased in terms of those sectors. Generally speaking, we would see, and then you've got your sort of business stocks like, or business financial orientated stocks like Xero and Afterpay and Zip. So we look at those together as well. And then, of course, after that, subsequently, you can make judgments. But as I said this morning, we're seeing a little bit of weakness in retail. We're seeing positive moves in the resource sector. That's by far the outperformance today, but certainly the financials are holding their own as well. It seems to be that's where the money is going. It's going into sort of your blue chip resource and financials after what was a very tumultuous week last week. But good question, David. Right. Okay. So that's Qantas now. Just quick look at ANZ just to see, just to have a look at that. We're getting a bounce on this. I'd probably say it's too early. Way underperforming CBA. Probably wait to have a convincing move. We would sort of want to see it over 28. And if we look at TWE, we've been watching this one, tracking this one for a little while now. And you can see there they busted higher through that 200 MA with some vigor. That will be Friday, then follow through on Monday. And we looked as though we're going to follow through today, but have really sort of drifted off. So this may be short. There's open, and then we've just drifted downwards. So this could be short term. This could be short term profit taking on Treasury Wines. But again, if we just take this right out to get context, put it on a line chart so you can see this level here is what we're eyeing at 1143. If we break 1143, you can see what we've got to make up here. So there could be, even if we just take this as our next level, if we break that, that's still a significant move higher. So not quite yet on this, but well worth keeping an eye on. There's a 10% potential up move in TWE. WOR were one of the ones we were having a look last week. It's retesting. Just bring this up so you can see it. It's retesting this this resistance at 1145. Looks reluctant to break through it, as we can see by the price action, but holding on to it. But if we do, again, I would sort of be keeping an eye on this pivot high here, about 1175. Again, we've got a nice 8% move higher in this. And certainly if we get some movement, some continued positive movement in the resource sector, then we should see Worley Parsons move higher as well. And one other that caught my eye. Sorry, LYC. So we've been keeping an eye on LYC. It doesn't really look as though it's going anywhere fast. So we've put that to the side for right now. And where are we? There we go. BSL. And the other one we've been keeping an eye on or had a look at fairly frequently over the last sort of few weeks is BSL. You can see that we had that pullback last week along with the rest of the market. Not quite a bounce yet, but pretty close to it. So again, one perhaps to keep an eye on. Maybe technically, if it breaks $22, as you can see there, that was a high we had back in April. Then we've got a nice upside again of around about sort of 5.5% to that level there. So it's very difficult to move past the resource sector at the moment. So we are actually going to plant our flag in Oz Minerals again, just on the back of that copper move. And in the first instance, it might be one that technically this fits as an accumulation. So we've got a really nice bounce on this, and we've got about 3.5% up to retest highs at 2708. So it could be that a position here and a position on a break of that will be a really good example of how accumulating might work. You're welcome, David. Sorry, I forgot. I didn't see your comment. Let's flick over to the US. As you know, the US has had a little bit of a rough ride, but it makes sense if we just quickly have a look at a couple of stocks. Again, it's very difficult to go past those that continue to perform. We look at Freeport, obviously a big copper play again. You can see we had this pullback, which took us back down to test $40. Now, really nice bounce over the last couple of days, and so we're eyeing this record high at 44.80. So that's one to watch tonight. We suspect it'll open above that based on what's happening with copper today in Asia. And so that's our chart of the day for the US. Again, we have done FCX before. It was when it broke through here. It was our chart of the day, but obviously it's done very well since then. Even if you were that's up 14%, so it was due a pullback, and so took advantage of this. But there we go. That's what we're looking at today. Outside of that, most of the earnings in this earnings season are done. So we've got a couple of the big retailers to report today. I think it even could be tonight. But outside of that, we're just about done for this earnings season. There's a few people sort of saying, well, look, the chip sector could be worth a look. So let's just have a look at some of the chips. Intel aren't doing anything to light our candle here at all. Let's pop it on the daily chart. You can see that bounce may be happening, but that 200 MA is a worry. Let's just have a look at Micron, which again was subject to a major battering. But this looks like a slightly more positive chart than Intel at the moment. If we get a move up from here over that sort of $81 level, we could see ourselves move back up towards 85 quite quickly. And then if we just look at NVIDIA, where are you? There we are. There's NVIDIA. We've talked NVIDIA before. Let's just let the data just catch up a little bit. But again, not a dissimilar picture to Micron. So we've got a key level to keep an eye on here at around about this 571 level, and with a potential move up to the next sort of potential technical pause. It's around about 4%. So that's where that's at. If we just look at a couple of the big tech just to see where they're at. Apple obviously was one that was our favorite when it sort of broke this level before on the back of this double bottom. We retraced all of that, but again, we're sort of starting to see a little bounce. But too early really to look at Apple, although if we get a break of 126, 127, it could be of interest. But as we said before, if there is concerns about interest rates, this is the index that'll be hit hardest. So just be aware of that as a potential risk. Also, if we just look at X, this is another one that we've referenced before. Sort of US steel had that pullback now, not quite as compelling yet, but perhaps a sort of confirmation that we've got a bounce in place, maybe a break of the of this pivot high here around about that 2750 might catch our eye. So just to reiterate our picks for today, we like GB pound USD. Looks as though it's continuing to move higher on the 30-minute chart. Just watch for a break above that. In the DAX is certainly worth keeping an eye on. On share CFDs, we like copper, and so Oz Minerals is looking pretty good to retest that level there. Though you could also start to look at Qantas again, perhaps. And we liked FCX in the US. Oh, I meant to just pop up Zoom. It was another one that is of interest. Now, obviously, the issue with Zoom is that exploded onto the scene when COVID was kicking around, and now we're trying to find a bottom, which may reflect the new normal about how frequently and how vigorously Zoom is used now. We're getting to the post-pandemic stage, or certainly seeing the end of that. And you can see really how this 311 looks as though it's an important level. We sort of traded around this level for quite a period of time. So you can see from beginning of March or mid-March through to the beginning of May, we were holding on to this as support. Now we've worked our way back up to that. So this is interesting. It wouldn't get very interesting until it had broken this level here at 341. That would also combine with a break of this 200 MA. So just another one to have on your radar going forward, perhaps. From a technical point of view, that looks very interesting. Okay, guys, well, look, I think that's all questions answered. Massive thanks on in terms of your participation today, your comments and your suggestions of things to have a look at. I hope that's been useful. Now, a couple of things obviously coming up. We've got Inner Circle tomorrow, and we've also got obviously our second part of the trading plan intermediate clinic tonight, which I think a lot of you are part of. If you're not and you'd like to be part of that, just drop me a line, but you need to do it quickly because it's an 8 o'clock kickoff tonight. I'll also give you the link for watching part 1. It's a part 2 series. Tonight we're going to sort of look, last week we sort of looked at essentially the components of a trading plan and why it's important. And tonight we're going to sort of look in more detail at what those details might be when we look at strategy selection. So we're going to look at the different entry strategies and look to find examples of those in the market live. So that's where we're at with that. And in the meantime, of course, trade safe. Just be aware that the obvious headwinds on the market are still interest rates. So bond yields may turn the market at any stage, as though there is some buying coming into stocks, or has been some buying coming into stocks over the last 2 or 3 days. The fact that the chitter about stocks being overvalued has dissipated a little bit, based on the fact that, startling fact, we haven't had this since 2008, I think was the last time. We've got over 85% of the S&P 500 reporting beat of EPS, okay, earnings per share. As I said, that's not been seen in 13 years. And we've got and that's with 90% of the S&P 500 reported. So it's quite a staggering number, and the beats have been significant. And so that justifies valuations where they are now. So, but whether there's enough there to take it higher than this, we may need some more news. So in the meantime, I hope that's useful. Take care. We'll see you again very soon. Bye-bye for now.